Hi traders, here's a 15-minute strategy that I use on a regular basis, and so far for myself I've been 100% in the money with this. It's extremely simple, pure price action. I'm going to teach you something in addition to it, which you can do as well, which only utilizes a EMA6, again on a 15-minute chart. You can apply this across all currency pairs and every single market session. Okay, Asian, London, New York. I won't be available for the next week or so. That's why I wanted to get this video into you guys. I want you to practice this throughout the weekend. Go through every single currency pair that you trade with that you like, and look for these actual setups. Okay. Now, how this works is, and you've got to start thinking along the lines of how professional forex traders do trade. Okay, there are people that some of you guys that are watching this video right now that are forex traders. Now, if you are proficient forex traders, many of you possibly know that the simplest way of trading forex would be following the patterns on charts created by movement by the market makers, or market movement created by market makers. Okay, this is how I was trained many years ago. I have seen that there are some courses as such that teach this sort of stuff. It is the simplest way of trading. What I'm about to show you is something I used to do on a 4-hourly chart as well, back in the day when I used to work a full-time job, because I couldn't be in front of a computer throughout the day. I used to work from 7 a.m. to about 11 p.m. at night. So this is a way in which I've used to trade. Now we've shortened all of that down to a 15-minute time frame, a 30-minute, or a 1-hour time frame. This uses, again, no indicators whatsoever. What we're basically looking for is two patterns in particular, either a W formation or a M formation. Okay, now the market creates those W's and M's. It is somewhat deliberate, but them being deliberate in doing this is not so much where they say, hey, I'm going to go create an M pattern. There is actual science and psychology behind this. What the market is doing, so say for instance, this one here, you recognize this to be a bit of a W formation, right? This would be the first wave. This goes up. This is the center of the W, comes back down, and then goes back up again, right? So forget about all this stuff for the time being. Recognize this as the initial W formation, right? This is the sort of charts and patterns that you're going to look, sorry, not charts, patterns on your charts that you're going to be looking for, right? I traded one of these yesterday. I didn't trade off this one, but I did trade off this one yesterday. I did both a Forex trade on this and a binary trade on this. Okay, I'm going to explain a little later why and how. But look at this, just off this single 15-minute candle, I think I netted about 20 pips off of this. And this candle itself is from bottom of the body till the top of the wick, 25 pips. Right? I got out somewhere here. Okay, I'm going to also explain to you how I worked out where the best part to jump out would have been. Okay, that was a 20 pip forex trade in 15 minutes. Plus, I did a entry on the pullback here for a call for 15 minutes in binary. Okay, here's what's going on. From this point on, I want you guys to start looking at the charts from a very strong forex perspective, okay? Which you're going to be trading binary off. Now, you look for your M's and your W's. This is where the psychology is behind it, or the science behind it. The market maker has moved the market down. This is a 143 pip move, okay? Market pushes back, well, initially it enters consolidation, then pushes up, pushes back down again, okay? Issues us with a pin bar. We take notice of a whole heap of pins to the bottom side, okay? Take note of this as well. When the market is at the low of the day or the high of the day, okay, or low or high of the session, when the market's issuing you with a whole heap of pin bars, especially after this sort of a move, say in Asian session at some time, what you're going to reasonably expect is that the market is signaling that this whole trend is over. And naturally, how we decipher if a trend is over is when we see consolidation happening with pins being offered in that opposite direction. So pins being issued in towards the lower markets pushing up, that's when we know trend is officially over, right? What we're then also utilizing is being able to see what's going on here. The pins are being issued towards the bottom, right? Then the market issues us with a pin bar, and then you get a nice green candle. Now, I'm looking at this, the first wave, second wave, third wave, and this is the fourth wave. Once this green candle completes, I now have to a large degree of confidence and awareness that this market may potentially move up to somewhere around this point here. Okay, and that will complete the fourth wave. Okay, sure, the market could climb all the way up here, and I will explain to you why I was able to decipher in my analysis that it's not going to climb all the way up here. But just here, what I'm thinking is the market could come back to its center point here, because this is creating a bit of a W, right? Now, what I do is, after this is finished, on the pullback of this candle, the second candle, this is the one you'll always be looking for, on the fourth wave of the M or the W. So this first wave, second wave, third wave, fourth wave, on the fourth wave of that second big candle. So this, I don't recognize this as the first candle. This is a bit of a doji. First candle, second candle. See this here? It looks like a bit of an M. First wave, second wave, third wave, fourth wave. This is the consolidation. This is the bit of the tiny dojis that happen. First candle, trade the second candle on the pullback. So when you see this to be slightly green is when you will do a put on this for the remaining duration of that candle. Same thing here. Second candle on the fourth wave of this W is going to be trading on this pullback, and this will be for 15 minutes or the duration of that candle. Okay, these are winners, guys. This is how you trade it. This is how I trade this sometimes. This is not the same as my reversal strategy for 15 minutes. This is something slightly different. I traded on this one, and here's why. When I'm looking at this, right, I know this is a W formation. You could probably zoom out here and have a look to see what the market has been previously doing. But when I see a drop, a massive drop in the Asian session, I know there's going to be a consolidation at some stage. I know and start looking to see what the market is doing. When I'm seeing this pin bars again, additional confirmation, the market's going to push away from here. Now, market, this one here pushes up. I take this trade. You wait for the market to do its thing again, consolidation. Now, here's how I knew that the market wasn't going to carry it back up again. Firstly, this bit here is right banks in the center of the London session, okay, or the early part of the London session. There was a 130, 140 something pip move towards the end of the Asian session. This market for GBP, JPY is not going to jump straight back up again. Okay, nowhere near straight back up again. Here's what I did calculation-wise. First thing is this. And you can do it at any point in time. I see this sort of a movement. I get my crosshairs, hold it down at the top of that trend run, take it all the way down to the bottom of that trend run, and I count the number of pips. See in the middle there, it says 1447. We'll go in one decimal point, and that's 144 pips, right? What I do now in my mind is I have that. So I'm looking on a rough basis somewhere between about 70 to 72 pips, which is the halfway mark. So what I then do is get my crosshairs again. I look from where this low point is, right? So I'm waiting for whenever the market issues me with a pin bar, a doji, giving me any sort of significant signal as to the market slowing down and getting ready to reverse. So I look for that. You can also start drawing support resistance lines in after this. You could draw one in here somewhere, and you wait to see what the market's doing. So anyway, I wait for this. Market's pushing back up. We're somewhere in this candle. I know, okay, market's possibly going back up again. This is potentially a fourth waver. Now, I will hold my crosshairs down at the bottom of this, right, and go up the 70 pips. That is, so that's 70 there. That's 72 roughly, right? That 72, guys, look at where it is. Let me draw a line in. 72 pips was roughly there. Okay, let me double check. So from the bottom of this to my line, there we go, 72.3 pips. That's where the market came up to. This is a new way. It's not a new way, it's an old way, something I haven't shared with you guys previously. This is a new way for you to actually look at how far the bounce back might be in the market, right? Going back to this point, so when I saw that the market was here, I completely missed this. I didn't see this. I logged on when this pullback was happening. I saw this push down. I was doing something else, and this pullback was up here somewhere, and that's when I started paying attention. And I thought, okay, do my calculations, drop a line there. When market finishes here, it pulled back. I both entered a Forex trade and a binary trade on this one, and that one very comfortably, right? I will explain in a second why I entered down the bottom here. You could have done this trade as well, okay? Notice how, look, the market pushes back up to exactly halfway point from here to here. Okay, that's exactly double the distance from here to here. The market, for whatever reason, will do this. This is how I decipher, even in a trend run, this is how I decipher if I can do a safe trade without jumping and falling victim to a reversal that happens. We have no idea, guys, that a massive push up like this can happen at any point in time, or when it happens. How I knew that there is going to be a big reversal coming is when the market maker, not only did they do the first four waves, right? They came back down to do another, what's called a stop hunt. This is them confusing a whole heap of traders. They come down, they issue spikes to the low, consolidate. Now, they push in the market back up, right? This is them convincing a lot of untrained traders that, hey, you know what, the market's going to go back up again. Usually this happens after news. A lot of people want to trade news, and then they'll say they'll get in somewhere up here and say, hey, you know what, the market's going to jump back up again. So what they'll do is, on Forex terms, they will put in long orders somewhere around here. What the market makers have started doing, they go into consolidation, start issuing pin bars to both the top and the bottom. This is where a lot of traders get confused and impatient as well. So then the market maker issues a bit of a green candle, because at some point this top wick area would have been a green candle. Then they push the market back down for a number of candles. This is a good 1.5 hours, each time issuing pin bars to the bottom, right? When I'm seeing this, I get a good idea that, hey, these guys aren't really planning on continually pushing the market down. They're still trying to convince people that the market's now going low. All these people that would have taken a long trade here, they would have been trapped here. They would have lost a lot of money. They would have put in a very tight stop loss, and they would have been triggered out of their trade somewhere down here. Then the market maker starts pushing the market down. Guess what happens? A whole heap of traders now are looking at this saying, hey, you know what? Market wasn't going up. This was going down. So what I'm going to do is I'm going to jump into a trade down here. Every single time this pullback happens, there are traders being trapped, right? So if I was to draw a line here somewhere, all of these traders that are here, they are trapped. The market push down, convince them that the market's going down, pull back up again. Push down, convince them that the market's going down, push back up again. These people are now trapped there, and possibly they're praying again. The spirituality skyrockets. They start falling back into religion, because they're saying, hey, God, push this back down again just a little bit, so I can either make a profit, or I can scratch this trade out with a very tiny loss. Market then pushes back up again. This is in the middle of, or the middle start of the London session. What's going on here is, now you and I, based off what I've just said, the fourth wave strategy, we could call it this fourth wave strategy, on that second candle on the fourth wave, after the pin bar has been issued, after the first green candle's gone up, you can trade on this one. and probably 90 to 100% of the time, you can win that. That's how easy that one is. Then I'm looking at this and I know for a fact this massive moves happened in Asian or towards the end of Asian. I'm guaranteed this massive move is not going to happen anytime soon, especially in the London session, right? Consolidation is going to happen at some point here. I was actually when I initially saw this bit before I walked away again, I realized this is going to be consolidation. So market goes back into consolidation. Now here's something interesting. Market maker comes back down again for a third time to do what's called a stop hunt, because a whole heap of these people here, they would have said, you know what, market's going up. So they would have taken a long trade, and then they would have probably, some of them were starting to get smart, and they probably did the stop losses somewhere down here. Here's what the market maker did. They pushed this market all the way down here and held it there for the duration of that 15 minutes. In addition to that, with this candle, they pushed it down a little bit more. They were trapping more traders. I don't want to swear in this video. I don't know who's watching it, but they were trapping more traders. That's how smart they are. They trapped more traders, pushed this market back up again. Now what's happened is that a whole heap of people that went short and had tight stop losses here, not only did they get triggered out of their trades because this candle here possibly would have hit their stop losses, but what's also happened is that they've lost a fair bit of money, because chances are most of them would have jumped into a trade somewhere down here and they would have said, crap, I've now lost 10 pips, 15, 20 pips. And that can be a lot of money for different accounts, and that's enough to wipe out some of the Forex accounts. Okay? I now know, I'm confirmed, this is the first point, second point, third point. I now know this market's heading up. I just don't know when, right? So market pushes back up. I trade on this candle, net my 20 pips. And how I know? When I'm looking at this point, I know the market's possibly going to maximum push up to somewhere here. Market goes into consolidation again. Consolidation is the worst enemy for an impatient person. Why? We want to do a trade. We want to do something. Notice how the market pushes back down, then issues a pin to the top, then, and it's a doji, it's a tiny, no body on this one, issues a pin to the bottom. This is a doji as well. Tries it again, pushes the market up, issues a pin to the bottom. You know what the market makers doing? They're wasting time. Because remember we said after this big move, they're not going to do another massive move within the London session. So what do? This is prior to New York opening. This big green candle here is the first 15 minutes of New York. What happens is that these guys now push the market down a fourth time. Why? When I see this at least 3 times or 4 times coming back to hit a point down here somewhere, because all these traders would have been triggered out of their trades, right? Market's pushing back down again to trap as many traders as they can, trying to convince them that now this market is going south, to the point where the body of this actually establishes a new low of the day. That is crazy massive, right? Now, I didn't actually get into this trade because here's what I was thinking. In my mind, and this is usually the case, I'm thinking that this would have pushed down, market would have possibly jumped a little bit up, consolidated, and then for the first 45 minutes or so, maybe come back down again, hit somewhere near this point, and then go boom. Here's what I've experienced this time around, which now I'm going to remember for next time. So remember, guys, doesn't matter how many years of trading experience you have, you're constantly learning. When I saw this, I started to think, hold on a second, this is first hit, this is second hit, third hit, fourth hit. When a market maker comes back down to hit it for a fourth time, not only are they trapping more traders, but at the same time, they're making sure they're triggering out as many of the traders that have known what's going on, out of the long trades that they had in place. Then, within the first 15 minutes, this happens. The market moves a massive 180 pips. Can you imagine how much money you could have made just riding that? Just that singular 15-minute candle. Right? So this is how we look at it. This is how we trade it. I'm looking at these W formations and this sort of M formation. So this is first wave, second wave, third wave, fourth wave. First wave, second wave, third wave, fourth wave. Now, you won't ever find a market where it will jump straight from a W to an M. This is not a proper M, but you can still utilize these points where, and you can use support and resistance as well, where you see the market come and hit one point, comes back, hits a point somewhere near it, hits another point close to it, doesn't break it, and if you start looking at the pattern, starts looking to you like a bit of a W. You can even jump on a 30-minute or a 1-hour chart if it's not making complete sense to you, and you say, okay, this to me looks like, here's a pull back up, pull back down, pull back up. This area is in fact the W move, right? But again, after this move, consolidations will happen because market maker will not move the market back up to equal this point in the same session or in the next session. It's rare how it will happen immediately. But when we start applying this sort of know-how to it, then you can sort of decipher when your entry might be. And many of you could have delayed it and entered somewhere down here. I could have. Sadly, I didn't actually think about the market jumping into this move prior to that fall because of all of this. Also, if I would have taken a trade, I wouldn't want to expect to take a trade somewhere down here, at this point where there's been a candle that's moved up. It's given me a very strong indication that the move is going to happen. So realistically, I would have expected the move to be down here somewhere, green candle, and then I would have taken it there, right? And then rode the market all the way up. That's what I'm looking for. But for the purposes of this video, what I want you to start doing is understand what the market makers are doing in terms of the W and the M formations, right? There are going to be times when you'll see what to you looks like a V or a reverse V. We're looking for pin bars, okay? We're looking for market pushes down, pin bar, this sort of stuff, and then market goes up on that second candle. So fourth wave of the W, fourth wave of the M, possibly the second wave of what to you looks like a V or a reverse V. You can trade them. Second candle on that, right? I'm going to show you some examples. So here, pin bar, green candle goes up. This to me is looking like a bit of a V. You can trade this on the pullback. You can do a call. These are more risky, okay? So if you can, certainly just do the W's and the M formations for the time being. You will see these happen throughout the day with all currency pairs. If you're seeing this sort of a formation on a multi-session, so by that I mean it's going over 2 sessions, Asian, Asian London or London New York, that sort of thing, this is almost a sure shot for you. For those of you that did ask me, hey Shiva, how do you trade Forex off of this? This is how. Okay, this is how I do it. I look for these formations. M and W, I'm looking to see what the market makers are doing. These guys are simply saying, I'm pulling the market down, I'm going to consolidate, confuse you, push the market up, I'm going to try and make you believe going up. No, I'm not. I'm going to push the market back down, trap traders here, push the market back down, make you believe I'm going south. No, I'm not. Issue pin bars, trap more traders, then I'm going to push the market back up again. On this fourth wave, second candle, take that trade. This is what I want you guys to do over the weekend. Go through all your favorite charts, look for these M's and W's, and look at what color that second candle is on the fourth wave. Okay? Look for first wave, second wave, third wave, fourth wave. You're going to be trading all of these on the fourth wave, just the second candle off of this, right? Here's something else that I want to share with you that you can utilize as well. This is all, by the way, pure price action, okay? The only indicator that I ever do use is this yellow one here, which is the EMA6 one, right? Yes, it's similar to the EMA6 strategy. Now, what I do with the EMA6 candle, the EMA6 line here is this. Once I've discovered my M's and my W's and I know that the trend run has begun, and by the way, guys, this is the proper trend run. This is crazy. This is the proper trend run that tends to happen, slow and steady, hundreds of millions of dollars going into this trade. So here's how I trade it with confidence. With my EMA6 here, and I'm going to introduce you to another line in another video, which is, see this red line here? You probably barely see it in this white one here. When I come back, I'm probably going to release this more in depth in April, but I want you guys to play around with this now, right? But for the time being, just look at this EMA6 one. When you see a proper trend run happening, and for all my buddies out in the US where most of the trends tend to happen with many of the currency pairs, when you see that trend run happening, here's what you're waiting for. You're waiting for price to open. It's possibly going to come down. At some stage, it's going to start climbing back up again. Okay, because look at all these candles. There are wicks on the end of it. What I'm waiting to happen is for price to climb up, hit my EMA6, and more often than not, I'd like for this to go slightly over. When it does, this is almost like a guaranteed win for me. Okay, now when this hits the line, you take it for a put for the remaining duration of that candle, and chances are you're going to win this. Why? This is a strong trend run. Whatever's going to push that market up temporarily, just know there are hundreds of millions of dollars going into this to push the market down. Right? Again, how I would do this here, I'd calculate, I'll zoom out, calculate this point to this point. So the previous low to the present high. From that point to this point here is 140 pips. Okay, so same distance actually from here to here. So what I'm doing now is from this point where the trend begins, I'm looking for half of that, 70 pips. 70, or you can even go down 60% of that. So 78 or so will do, right? Somewhere around here. I will carry on with this strategy of mine till the market gets to possibly this candle here. Looking for this pullback, hit it when it hits the EMA6. Hit it when it hits the EMA6, right? Why am I doing this on the EMA6 up there somewhere, and why am I trading the pullback? It's for this reason. I did see, I think it was on the euro. See, in this instance here, I don't think it was this instance. There was another one. I did see an example of why you should. See, even this instance here. This is not the best example, but I can use this to explain it to you. If you wait for the candle to come and hit your EMA6 line and hopefully go above it, chances are, even if the market reverses on you, the body would be, in this case, higher than where your entry would have been. You still win that trade. Okay, that's what makes it a safe trade. I did see an example that was a clear one of why we actually do that. Where is it? See, in these instances here as well, if you were to take this trade, you wait for this line. See how it doesn't hit our EMA6 one, this green candle? We simply avoid that trade. We don't get in trouble. That way you're safe. Okay, here as well. See how this is not actually part of the trend, but I'll use this example. See how this candle opens here, market climbs all the way up here, hits our EMA6, right? If you were to take a put there, you still win this trade. Okay? With the trend though, this is not a reversal. You literally are going with the trend because you're expecting so much money to be going into this. Again, how you keep it safe and you don't get trapped down here, measure the previous low to the present high, give it about 50% or 60% of how much you think the market's going to move. 50% is safe, 60% is great for some of you cocky traders out there. Calculate halfway and then only look for these entries going halfway into that trade. Okay, so again, just a summary, you're going to start looking for your M's and your W's. You're going to be trading on the second candle of that fourth wave. That's the specific strategy. And that's it on binary options, just that singular candle. If you want, for some of you binary Forex traders, certainly, you can trade that as well. Notice how this candle here is 15 pips long. Right? There's no guarantee of the third candle. There will be if you know this is a strong trend that's happening. But that's 15 pips you get picked up on just this candle, in addition to winning the binary trade on that. Right? Look for that, do that. Again, fourth wave, second candle, not counting this doji, okay? One nice decent candle, next candle. Not this doji here. One nice decent candle, next candle. Trade on the pullback only. Again, on a trend run, wait for price action to come up. Hit your EMA 6 before you take a put on a trend up. Same thing here. This one I probably would have avoided, but same thing here. Price comes down, hits our EMA 6, you hit it for a call. That is pretty much it. Let me look for another example. See all of these ones here? At some point, price would have climbed up. See this one? I love this one. Price above it, I could have hit it for a put here. Again, I wouldn't do this. I'm just showing you what price looks like on an EMA 6, simply because this, for me, is, hey, you could have traded this red candle, mind you, off of this spike. But for this for me is not a trend run. There's no signs of a trend run there, so I don't enter it. I probably wouldn't traded this as well because I can't see any signs of that trend happening. This one is a guaranteed trend run. So if the market here behaved like this, I would have actually waited for the market to pull back down, hit my MA6, and I would do a put there. Okay, many opportunities there for you to be able to take that trade in a short period of time. From there to here, I can see 1, 2, 3. In this case here, and for those of you that like doing my 15-minute reversal trades, you can certainly put that into application here. I would only do it on the third wave. If I know that this is going to be a W formation, I would only do it on the third wave, because if the market comes back down after the fourth wave here, this sort of stuff can happen. And when you see this sort of stuff, you guarantee there's going to be a massive move that's going to happen in the next session, simply because the market maker is spending hundreds of millions of dollars moving the market in order to trap traders and to trigger them off, the ones that made the right choice. Look at this. In the space of, this is 1 hour, 1.5 hours, that's a 250 pip move. Imagine just doing one of those in a day and that's it, or one of those in a week and that's it. Okay, I don't want to carry this video for too long. Please go and practice this in the comment section. Let me know how many proper M's and W's you found, and look for the pin bars, and then the second candle of that, look to see if it's in line with the M's and W's. So with your M's, the second candle on the fourth wave should be a red one, and with your W's, the second candle on the fourth wave should be a green one. All right, I'm starting to get confused. So guys, I'm hoping I didn't confuse you there. Go ahead and look for these tiny ones, avoid. Look for M's and W's that kind of go multi-session. They're bigger ones. They're almost guaranteed for you to, on those waves, take the second candle. Look at this one. This to me looks like a bit of a W here. This second candle is a green one. Take it on the pullback. Okay. This is you could do it on the V's and the reverse V's as well. Slightly a little bit more risky, but certainly look for a pin bar. See this one here, issues me with a pin bar. Chances are this one's going to be a green one as well. Not always. What if this was actually a trend down? So avoid these ones. Just look for your M's and W's for the time being. See if you can find 10 over the weekend, and note down how many of them on that second candle would you have won. All right. All the best. Have a great weekend and a great week ahead. I'm going to have a bit of a vacation, and I'll get back to you guys sometime next week. Something else that's coming is the list of brokers. Now that's happening quite nicely, I'm going to possibly just put up a blog and share that information there. The template that I wanted to share with you guys is completed as well, so I will link it onto that blog. And I'm hoping to start doing some more in-depth release regarding trading gold, silver, and oil at some point end of March and going into April. So that sort of stuff. I am considering at this stage, it might be June, because I am planning on doing a bit of traveling between now and June. Probably June or July is when I may consider just setting up like a trade copier or something like that. So some of you guys, whilst you're still learning to trade this entirely for yourself, I will run a trade copier. At this stage, I haven't come across any that I completely trust, but there might be an opportunity where we can both do binary and Forex copying of trades. Okay, so we'll see how that goes. But in the meantime, guys, practice this, nail it, make sure it's 100% in the money. If you find instances of seeing M's and W's where that second candle on the fourth wave isn't the color you were looking for, figure out why and figure out what you can actually do. Can you apply support and resistance to all of that and see if that works for you? For me, presently, this is 100% in the money. Why? Because I'm quite selective with my trades as well. This is just another way of looking at the markets and another way of trading both binary and Forex. All right, so all the best.